So we have inflation in the headlines, and we wanted to talk through today and describe a little of the current situation we're in and why inflation can scare people sometimes with their investment strategy, and then talk a little bit about what we should do about it and what changes, if any, we should make to our investment strategy. So Mike Eklund, good to have you again here today. Let's talk a little bit about the current situation that we're in with inflation.
Yeah, so it's the talk of the day since the recent inflation report came out, and they inflation rate has increased by about 4.2% over the last 12 months, which is the highest in the last 10 years. And for those of you who have talked about lumber prices or buying a car or a boat, have seen those price increases of late. So there's a concern whether or not these increases are permanent and we're going to return to levels we saw back in the 1970s, or more, is this transitory or just a temporary blip, given we're all kind of stuck at home last April, and now I've finally been able to go out and enjoy our life.
Yeah, and inflation can be a good thing, right? I mean, the Federal Reserve tries to control inflation so that we have a little bit and it doesn't move into deflation.
Exactly. The Federal Reserve's mandate is stable rising prices. And we've had inflation about 3% a year since 1926. The last 20 years averaged about 2%. So a little bit of inflation actually is a good thing. What we're concerned about is either really high inflation, also called hyperinflation, or else deflation is really bad as well. But the concern today is higher than normal inflation.
Yeah, and the hyperinflation is what's driving a lot of opinions and changes, ideas people want to make to their investment strategy. So let's talk about that investment plan and how we approach it, how you should approach that idea.
Well, I guess the first thing I think about what money is, and really money is purchasing power. And for that, if you're saving today, you want that money to keep up with your cost of living. If the cost of a gallon of milk increases over time, you want the money you have to be able to pay for the same amount of milk. The challenge is what investments work well and what typically don't work well over the long term with inflation. Historically, global stocks and investment real estate have been good long-term inflation hedges, whereas cash and bonds historically have not been great with inflation. And so, for you, the key thing is not to try to time the market, but stick to your investment strategy with those, stocks for the long-term growth. But even though bonds are not great for inflation, you may still need that money for the short-term for spending, or for used to buy stocks during market declines.
Right, those future opportunities that we don't get many of, like maybe only five or six opportunities we've had over the last 20 years for that to happen. So you want to have some safety there. But much of the attention gets to that market timing idea and really wanting to catch and be the one to predict which investment is going to do the best. And some people look back on history for that, and they start to think around commodities and gold and oil. Others are looking at more current investments, crypto and things of that nature. So maybe even Gamestop in some situations, 100%. So what's the danger in having a concentrated risk like that in your portfolio?
Really, by making a big bet on one specific investment, would it, if it's not Bitcoin, if it's gold or some other type of, hot tip or investment product of the day, is what if you're wrong? Because when you time the market, you have to be right twice. You have to be, when to buy and when to sell. And that's why we feel it's more comfortable to stick with your long-term investment plan. I know it's boring to say, but versus trying to time, should I be buying Bitcoin or should I be buying gold? When, to be honest with you, gold's long-term track record with inflation is okay. It's definitely not, the long-term results are definitely below what you've seen for global stocks and even bonds. And then crypto has only been around for so long. There's really we don't know yet. I mean, it's declined 20%. 10 times in the last 3 years or 3 or 4 years. So it's a very volatile investment that it's still unclear how it will perform over the long term if we do have an inflationary environment, which I say we don't know yet. I mean, it could be temporary or it could be permanent.
Right. So when making bets in your investment strategy, it's important that your investment strategy is in service to a financial plan, because when you're putting together your financial plan, you're talking through your goals, you understand when you need money and how much you need to keep in safety. So that could help you make these decisions and feel more confident and sleep better at night. So that's what we help people do here at Financial Symmetry. We have a lot of other articles and videos on our website and here on the channel, financialsymmetry.com. You can check out, and then we'll be back with you. If you don't want to miss the next episode, you can subscribe here, but we'll be back with you again in 2 weeks.